This is our Forex blog for May 7th, 2013, and this is our currency indexes, which basically means we compare every dollar pair, every yen pair, every euro pair, pound pair, and so on to every other one, and then create a chart of what's happening in that currency. And it's very predictive and easier to read what the likely trend direction is than in the past. For the past 6-7 years, we focused on currency meters, which showed the real-time strength or weakness, the daily trend, the weekly trend, the monthly trend. Most people find it very predictive to use our older tools along with the new currency indexes. The currency indexes also let you see what the 15-minute moving average is of that currency, the hourly moving average, what yesterday's high is of that currency, or in this case the pound, the low of that currency. And by knowing all these details, the yellow line is the average price in all the euro pairs yesterday. So these are filters for letting you know what direction to trade most euro pairs. If the euro is above its hourly, and especially above the point of control the previous day, then it's likely to go up. And so you would want to trade that currency against a currency that happens to be underneath its hourly and or underneath its point of control. So at 2:30, when the pound broke down, obviously the dollar's trending up, the yen's trending up. The pound at 2:30, the euro's strong, the pound's looking weak. You want to buy the euro pound at 2:30. And you can see on the chart at 2:30 right here, it went up for the next hour. Not some moves are going to be small, some moves are going to be bigger. Let's go and look at all the different currencies, and you'll find some that are much weaker than the pound. The pound really wasn't that weak, especially compared to maybe the Australian or even the New Zealand, which is also trending down. Buying the euro Australian at 2:30 or the euro New Zealand at 2:30 was a much higher probability trade and probably more likely to give you 20 plus pips. Here's this at 2:30. Notice we're looking to buy the breakout here or the next pullback. Put your stop underneath here. And most people aren't going to catch the entire move, but you can see this is up about 125 pips. The currency meter really helps you see which ones are strong, which ones are weak. And typically when a currency breaks out, either underneath the hourly to above it or above the hourly to below it, it tends to be a very high probability trade. Also, anytime you see rectangle patterns for multiple hours in low volatility ranges, when the market breaks out of those ranges, it tends to cause big trends. Obviously, this time of the day, many currencies are in tight little low volatility rectangle patterns. You can see Swiss broke out to the upside. At the same time, the Australian broke out to the downside. Selling the Australian Swiss is obviously a very high probability trade. And you can see, this one was underneath the hourly, had a false breakout back above the hourly, back below it, and then just exploded down. And usually underneath our 2.0 white containment bands, price is going to reverse. You also have our perfect oscillator. The majority of the time, when price hits the -80 level, you're going to get some kind of reversal. And you can see pretty much what happened. This area right here reversed a little bit down, not much. This area right here went sideways for an hour, and then we had reversals up here at a much higher probability place. This area here did cause a little bit of a bounce. Market went sideways on that one and then up. This one right here nailed the low. And the perfect oscillator compares each currency to its maximum volatility move for any time of the day. And any time it's moved 80 to 100% of its highest volatility over the last 20 days, it's very significant. In fact, most currencies you can make a living just trading off of these extremes. When you get in an area that has an extreme move like that, basically once it breaks the trend line up there, you can do a counter trend trade, And here you have a nice little double top where there's clear divergence on there. That's more of an advanced pattern there. But most of the time when markets get at or near the 80 level, there's going to be some kind of reversal. You can see that a little bit earlier right here. Let's just put in some other symbols so you can see how accurate this is. Plus 80 level here. You can see the market pretty much died out down up there. Here's the low, it reversed. It's at one of those levels right now, so it's probably likely to reverse up maybe to 2025 right now if you're trading right now live. This area right here reversed up. This is really close to the minus 80 level, reversed up 25-30 pips. This is a very accurate tool, and it's based on each currency's volatility. You're going to tend to get reversals when the market's at these levels. And this one went a little bit down before reversing up. As at an extreme right here. Obviously, it was not past the outer bands. When you get the outer bands hit and an extreme like this, there tends to be reversals. So I'll oftentimes go short right here, lose 8 or 9 pips, go short again here, and make 20-25 on the reversal. Notice these areas right here, there was a little bit of a bounce, a little bit of a bounce. It's very close to that level, it pulled back, and the rest of the day, it's been dead, so it didn't move anything. Just pick a random pair, Euro CAD. Each of these compare that currency's maximum volatility. You can see here, it pretty much stopped the up move. It's relatively close to the low right there. It's way above the level here, it pulled back. It's at the low, went up, very close to it right here, kind of went up sideways, low right here. And you can see it never really went more than a few measly pips underneath it. So Perfect Oscillator is an excellent tool for especially new traders for knowing when a currency's gone too far. And there's so many ways of using this currency index. When the previous day's low is hit, acts as support, 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 and finally breaks down. Very high probability trade. Same thing here with the CAD. Hits the previous day's high, can't break it, finally does at 4:30. You want to buy the CAD versus whatever's weakest at that time. It might be the Swiss. CAD Swiss at 4:30 is likely to go up probably 30 to 50 pips. Here's 4:30, and if you're watching the chart, you would see it go from below to above the hourly. This one went up from 93.10 to 93.70, 60 pips. And even if you notice that on the currency index chart around 3:30, a measly 10 pips away from the perfect entry right here, you still have a potential risk of this, and most of the time price will work its way if it's a very strong move to the upper band. In some cases it goes beyond the upper band, but you can see the risk is very low compared to the likely reward, and the reality of what happened was even probably almost double what the potential reward was. And that's the key to trading: small losses, big wins. And there's so many ways of using this. You can draw your fibs on the chart here. Now in this case it doesn't look like it made it up to that level, but you can also have drawn it on the first one. This fib level right here is likely to reverse, so is the 1.618 level. So at 10 o'clock you could be looking to sell the CAD because it's up too much. And what currency maybe is down too much? Well, the New Zealand's near the lower bands. I would prefer to trade a currency like the euro, who's been trending up and has just had a pullback. The euro CAD close to 11 is likely to go up. The euro happened to break down right before that 11 o'clock period, but you can see 11 o'clock pretty much drifting up a little bit. If you had got into a buy right here, you really didn't lose much. I think I might be off on the times here. Yeah, both of them pretty much went sideways, and that's why that chart happened that way. You can see Let's look for some other opportunities on here. You can look for double tops, double bottoms. You can look for trend lines on a currency when it's at the highs and it can't seem to make it up. You can also seem to draw trend lines on a currency that's trending, right click on it and duplicate it, and then plot it from the high. And another way of doing this is to use our you can't see it on that particular chart, but we have a tool that once you draw one trend line, it plots it off of the other one. Oops, let me put that on here. Once you draw a trend line and you let go of the mouse, if you plot it over another high like right here, or even this one right here, you can see quadrants. And usually in the upper quadrant, price runs out of steam. So the euro, or the dollar, for instance, was likely to kind of run out of steam. This is a way of using it to anticipate future price direction. The dollar is likely to fall. What currency is very strong at that point, likely to go up? Well, the CAD's still pretty strong at that point. The New Zealand's down a lot, and it's probably likely to get some kind of a bounce. Most currencies that go down near or lower bands work their way back up to the hourly. So you could, it's a little riskier trade. Ideally, I would want to trade it against a currency maybe that's looks strong on this chart. This one, the euro, is still above its previous day's high and has already pulled back. It's underneath its lower band. You could look for a euro dollar buy coming up to 11. It's not the biggest win in the world, but you can see that this one, did go up a little bit. It kind of went sideways. Whether you got into that trade, you certainly didn't lose on that one. Most of the time when currencies hit the upper quadrant, they'll reverse. And you can also use this for trend trading too. Once you have an initial trend on the chart at 9 o'clock right here when it's in the lower quadrant, pretty much likely to continue that trend up. The daily trend's up, the weekly trend's up. You'd want to be buying the dollar versus, maybe one of the weaker ones. The Australian's weak, the New Zealand's weak. So you could say coming up to 10, buy the, or I'm sorry, sell the Australian dollar. And again, not the biggest move in the world because it's already gone considerable distance down, but it did, pull back a little bit. Let's take a look at the New Zealand dollar. Same thing, a little bit bigger move. Nice little pullback here. And one of the reasons that this kind of stalled here is, one, it's underneath our 2.0 band, which tends to contain price. Also, perfect oscillators and at an extreme. But you got a 20 pip win on that one. The other one probably 10 or 12 pips. And these things add up. If you see a trend, let's say, obviously this one's clearly down for today. A lot of times you can also use the perfect oscillators Bollinger Bands as areas to look for sells. Earlier today, the beginning of the trend is much higher probability right here, right here. Once it starts working its way down, it's gone down one wave, two waves, kind of 3 waves, 4 waves. It tends to get more of a bounce. A lot of times you'll get a 2-wave bounce off of that. This one's just kind of drifted up. It never really made a second wave. Most of the time, if it does make some kind of a move up, if you draw your fibs on there, it'll work its way up to the first or second fib target, and those are excellent places to get out of your counter trend trade and go back into the direction of the trend. But basically, in a nutshell, you want to buy the strong ones versus the weak, and get into these trades on pullbacks. The CAD's an excellent one, very strong, continuing trending up currency. Draw this on the chart, and you can also see when a currency is kind of running out of steam, when it can't get to the upper quadrant. Usually when that's the case and it's kind of going sideways at the high, you can kind of look to sell this because it wasn't able to get to the upper quadrant. As long as it keeps getting to the upper quadrant, you want to look to buy the lower quadrant on pullbacks. If it can't get to the upper quadrant, a lot of times it walks the line here and then breaks down. 1130 is not a bad place to look to sell the super strong currency. And you could do that against a currency maybe like the pound that was stronger earlier in the day, had a price move above the previous day's high, and then had a really massive drop. It's right near the lower band. At 1130, the pound CAD is pretty high probability counter trend trade. Here's 1130, and you can see this one was deeply underneath the lower band. It's also at an extreme, and you got a nice little 20 pip bounce off of it. Also, if you draw your fibs off that last little drop, anytime you get a move underneath the lower band and it kind of goes sideways like that, a little flag pattern, it usually almost always reverses between the first and second fib target. First and second fib target, even inside the middle of the range, is probably 70% likely to get a bounce. When it's this far underneath the lower band, I would say it's 80 to 90% likely to get a bounce. And you can see it quickly went up about 20 pips. Pretty high probability trade right there.